Hey there, everybody. This is Beyond the Beach, career conversations with graduates of Cal State Long Beach. I'm your host, Kenji Klein, Associate Professor of Management at the College of Business at California State University, Long Beach, where I teach business strategy, general management, and organization theory. In this show, I interview former students and recent graduates about life after Long Beach. Our conversations cover topics like how my guests chose a career path, how they landed their first job, and what it's been like to navigate the challenges and opportunities of their early careers. My hope is that you will find their experiences useful and inspiring in helping you chart your path beyond the beach. My guest today is Elliot Huscher. Elliot was a student in my business strategy class back in 2018 and now works at a startup doing consumer loan origination.
That's correct.
Yep. Hey, Elliot, it's really good to have you here today.
Thank you for having me. It's a pleasure to be here, and I think this is a really awesome podcast that you're starting to help students find their way through their professional development.
Yeah, I'm really excited about the idea. So let's dive right in. Could you just briefly introduce yourself to the audience, a little bit background about who you are, when you graduated, what you studied, and why you chose the field that you did?
Yeah, totally. So I graduated back in 2018, and I was a business administration finance major. Growing up, I was super fascinated by the weather, actually, and meteorology, and how meteorologists would be able to forecast the weather 10 days, or sometimes even longer out.
Yeah.
But as I grew up, another kind of forecasting took me even further, and that was trying to predict what financial markets would do, and how people determine price and value for different types of asset classes through different economic cycles. So that's how I ended up in finance, and then my first job out of school was at a wealth management practice at an RIA.
So that's interesting that you got into this because of an interest in meteorology.
Yeah.
And the reason I say that is because, before I ended up studying management and going into business, I was actually going to be a historian. And so I was in kind of the liberal arts side. And I remember thinking, statistics is BS, right? It's just a bunch of crap. And then, someone was like, because we have statistics, we know what the weather is going to be like 7 to 10 days, sometimes even 2 weeks from now. And I thought about that going, yeah, it can't be BS if we can actually accurately predict the weather. Right.
And so there's multiple different models that meteorologists use, and it's just whoever can get the best data and apply it in the best way, which is very similar to what a lot of financial firms do.
Right.
But there's a level of human emotion and just some form of chaos theory that gets added to the mix.
That makes it a lot more complicated.
Yeah.
So does that mean, did you have to do a lot of statistical analysis and stuff in your finance program, or are you doing it
Our finance program had, I think, there was business stats that was required, and then maybe one other statistics class, but I took AP in high school, so I didn't take that here at Long Beach.
Right.
But actually, one of your questions I think that you're going to ask later today is things that I might do differently. So we can touch on that at that point.
We'll get at that. Yeah, that's for sure. And then, I'm sorry, you said, so right now, so the first thing you did when you graduated was you were working in wealth management.
Yep. Okay. So that's just investment advisory for an independent office up in Sacramento.
And that was basically individual consumer?
Yeah. Okay. Yeah. So families, nothing bigger than that.
Okay. And then right now you're doing your startup, which is consumer loan origination.
So I work at a Series A FinTech startup. We've got about 25 employees. 3/4 of that is software engineers.
Okay.
And then the rest of us are on the product or business development side of things.
Okay, cool.
It's ever-changing and a lot of fun, but no shortage of work, that's for sure.
Yeah, right. Startups can be a grind, but they can also be super interesting.
Yeah.
So let's start with that first job after graduating.
Yeah.
How did you find it? And then how did you navigate that transition from being a student to being an employee?
Right. So going into school, thought I wanted to do something in finance, but wasn't sure.
Right.
Everyone always talks about investment banking, but that wasn't super keen for me and just wasn't one of the options that was most readily available.
Right.
So the standard internship that I learned that most people get their freshman to sophomore summer was an internship in wealth management or financial advising. And so I was fortunate enough to get hired by a group down here at UBS in Seal Beach.
Oh, okay.
And so that's where I started in the field.
Right.
And then from my time spent there, I realized that I wanted to work at a smaller shop that would have more flexibility, a wider range of products to offer. Right. And so that's what led me up to Sacramento.
So just to pause, UBS is big.
Yes.
And so that experience of being in a really big place made you realize that's not where you wanted to be, at least right away.
Yeah, so at the larger institutions for wealth management, they call them wirehouses. Okay. So that would be like your Wells Fargo or Morgan Stanley or something like that. And the financial advisors there typically have a slightly smaller selection of products that they can offer their clients because they're tied to the larger organization that they bank through, or they broker through, I should say. And in an independent shop, you just have less restrictions, you have more freedoms, and that was attractive to me because I just thought it made the line of work a little more interesting.
Okay. And so the internship that you got, where did you get the internship?
Okay, so what do you mean?
I'm sorry. So I thought you said like you got the summer internships initially while you were a student?
Yeah. Right.
So who did you go through to get it, or how did you find that? What was that process like?
So that was my freshman to sophomore summer. And I remember Googling a lot about just all of the RIA practices here in Long Beach. Okay. So that was through the big brokerages, and then there were a couple smaller shops.
Just for our audience, RIA?
Is Registered Investment Advisor. Okay. And so I found them all on LinkedIn and started messaging folks. And the woman that I worked for down here, her name was Lisa Chapman. Her book of business was well over $500 million. And so I thought that would be a great place to start and kind of get my feet wet in the industry. Right. And and lucky enough, spent 2.5 years working for her. Great time. And then just wanted to get back up home where I was raised in Sacramento, and at a smaller shop that was had a little bit more, was a little more nimble, for lack of a better phrasing. Right.
So you're originally from Sacramento.
Yeah.
I've been driving up. I have a really, really, really close friend, like freshman year of undergraduate. So for me, that's a long time ago. Who lives in Sacramento now? So I've been driving up there actually pretty frequently just to hang out with him and stuff.
Very different than life down here in LA.
Yeah, it is.
But like everything, pros and cons.
Yeah, I know. But driving through the Central Valley in the middle of summer was pretty hard.
Yeah, Bakersfield, 115 degrees. Yeah. Where else would you want to be?
Yeah, exactly. With that wonderful cologne smell as you drive through there. Yeah. But anyway, so you did the internship while you were a student. Yep. That was something that you basically just were like nose to the grindstone. I got to look. I got to reach out. I got to contact people. You contacted people. You found the internship. It was a good experience. And then when you graduated, how did you find the job at USP?
So this shop actually was the advisor for my parents, so that made the introduction really easy. Okay. But I also interned for them before I started college. Okay. And at that point, it really wasn't anything technical. Okay. It was just like, hey, here's the office. Okay. Here's what we do, and would get a little bit of exposure to the industry to make sure this is kind of what I wanted to do. Right. And I knew the partner very well. He'd come out to talk with parents frequently. Right. And so it made the transition super easy from that regard. Yeah. What attracted me to his practice more so, though, was he was getting towards the end of his career. Right. And so I thought for me, if he phases out of the business in 5 to 10 years, that would be the perfect opportunity for me to start there, begin to build the client's trust, and then when he wants to phase out, to smoothly transition the book of business over to myself. Okay. All right. And because
so you were thinking that part.
Yeah.
That's good.
I always like to have 5, 10, 20-year plans, and as the listeners will learn, doesn't always go to plan.
Right, of course.
But it's good to have long-term goals and constantly kind of check yourself to make sure you're on that track for where you want to be later in life.
And then, so in the internship and in that early job, like on a day-to-day basis, like what were you doing?
Right. So it was a lot of learning. Okay. And so my favorite part of the job was to sit in on conversations that the advisor would have with their clients and learn how they make the investment universe just more digestible to people who don't focus on that day in and day out. Yeah. And the biggest thing I learned...
So that's a lot of communication, right? That's like, how do I speak in a way that people can understand?
Yeah. It's all people skills. Yeah. And what my first boss, Mike, told me is it's just learning to tell the best story that you can.
Right.
And you got to be able to know what the person you're speaking with understands and
Right.
like translate it to their level,
Yeah.
and then help them to just get a better understanding and build from there.
So, yes, and I interrupted you, and I'm sorry.
All good.
It's the thing that I do. But you were talking about what you were doing on a day-to-day.
Yeah.
And so initially it was a lot of learning, and you were sitting in on these meetings with the clients, and you were absorbing what the people that were ahead of you were doing and learning from that.
Exactly.
Okay.
And so kind of just fly on the wall.
Right.
And then a lot of prepping documents for meetings.
Okay.
So trying to get materials ready, no matter what questions might be asked for the advisor, just have everything handy. And then a little bit of work on the asset management side of things, learning to actually build a well-diversified portfolio that would benefit the client contingent upon their risk tolerances and stuff like that.
Okay. So, how long were you there for?
The internship was for 2.5 years down here. The summer before that was only 1 month. And then for my first job, I was there for just over 2 years, I think.
Okay.
Yeah.
All right.
So, and at about 1.5 years in was when I started to get an inkling that maybe this wasn't the best fit for me.
Right.
And so it took me probably 6 months, a little bit longer than I would have liked to, but that's about how long it took me to find the next role.
So that was when you realized it's bigger than you want it to be. You wanted to do something else. So you decided, okay, it's time to make a pivot.
Yeah. Yes. So
what was that process like?
The thought
and
process,
why did it take 6 months? Did you wait the 6 months, or you were actively searching for 6 months until you found what you wanted, or how did that play out?
So at this first office that I worked for, there were 4 advisors, and I really enjoyed my experience there, and it seemed like they enjoyed the work that they did, the relationships that they built with their clients. Right. They were fulfilling a need in their client's life and providing a valuable service. But what I realized was at my age, because at that time I was only 23 years old, I thought it would be more important for me to build hard skills and less soft skills, working on relationship management. Right. And I really had a yearning to get closer to the assets. Right. As a financial advisor, generally speaking, this is painting with a broad brush, so it isn't always fair. But you focus on diversification and just finding a portfolio that suits the risk tolerance of your client.
Right.
But you're not looking like at QSIP level of individual bonds generally, and then making bets at that level of granularity. Yeah. And I just wanted to experience that and see what it was. So I had the goal of my top goal was finding a large asset management firm where I could work on a bond desk. Okay. Because I thought bonds and fixed income were the most interesting part of finance, because that defines our risk-free rate, which is supposedly how everything else in the world is priced off of. Right. So I thought it would be really neat.
Discount on and everything else. Yeah.
Exactly. So I thought it'd be really neat for me if I get a seat at ground zero there and see how those instruments are priced, what portfolio managers are thinking about, and kind of that transition. Yeah. And so to find a seat that was open and to really commit to going down a very different path than wealth management, it took about 6 months.
Okay, yeah, because that's a big transition.
Yeah, huge transition, totally different progression path, but still in the greater field of finance.
I mean, that's closer to what you initially were saying. That's sort of, everyone sort of starts in the I want to be an investment banker. Right. Yeah. Kind of thing. Yeah. That's closer to that world.
Yes, very much so closer to that world. The investment banker would be more the sell side role, and this is just the counterpart of that on the buy side.
On the buy side,
So it's more towards that, and it's very, very different than wealth management.
Okay. And why, was it just because you found it more interesting? Or were you feeling that you sensed that there's going to be a limit to how high I can go if I don't have this sort of broader understanding, right? Because you had talked about, right, it's like I've been doing working on the soft skills and selling these packages that kind of other people were assembling, or that you could assemble, but all the basic work had been done. Yeah. Was it you were saying, hey, if I'm just doing this, I'm only going to be in the sales thing. I'm not going to really have this deep-rooted understanding, and therefore that's probably going to limit me. Or had you run into things where you could clearly see it was going to limit you? Or was it really just, I'm really fascinated by this, and so I want to understand it.
Yeah, I don't think it was a limiting thing.
Okay.
But I just realized that the times in my first role when I was most fascinated and engaged in the work was when we would have portfolio managers come into the office or their sales associates to get deeper into the weeds of certain strategies and really talk about the nuances of what made their product different from a different or similar fund. And it was in those meetings where I could ask specific questions that I just found that time felt like it would fly by, and it just kind of spoke to me at a little bit of a deeper level.
Right.
And the other thing that was hard, as when you're in your early 20s, it can be difficult to have people a couple generations older trust you with all their assets.
Right.
And so I thought it would be healthy for me to go get some different investment experience that would build some hard skills. And then later in life, if I chose to come back to financial advising, I'd have a couple more years under my belt. I'd have a different and unique skill set than most financial advisors have. And that would help me to connect better with clients and better tell the story of what we're doing.
So you'd be a little older and you would have technical knowledge.
Exactly.
Basically, like, even if this person is, if I'm in my mid-50s and I'm talking to someone who's at this point maybe 26 or whatever, but they know some really technical stuff that I'm like, I don't even know what that is. Probably like, okay, this person is well trained in their area. I can trust them.
Right. There's domain expertise that would have got built from the other role, and so I didn't see it as completely closing the door to financial advising, but maybe providing me a alternate platform to launch off of later in life if that's something I chose to come back to.
And so then the place that you ended up in was what? You found something?
So I ended up at the CalSTRS pension fund, which is a $300-ish billion fund, and I ended up on their fixed income team.
Is that like the thing that manages
my
retirement, my personal retirement? Is it state employees?
Yes. So if you're a state employee, your pension is managed by typically CalPERS, so that would be the Public Employees Retirement System.
That's what I meant.
And then I was at STRS, so the State Teachers Retirement System. So all of your grade school teachers, K through 12, who have a pension, was managed by that fund. And then I ended up on the fixed income team, so that's all bonds, so treasuries, credit, structured, all that good stuff. And I was on the structured credit desk. So we had a heavy emphasis on residential mortgage-backed securities, and then a smaller allocation towards commercial mortgage-backed securities. And then through that, I also got to dabble with other ABS or asset-backed security classes like auto or credit card or aircraft leasing or some more esoteric stuff like that, which was really interesting.
So and so did it end up being exactly what you were looking to do? Or
it was exactly what I was looking to do, but what I somewhat quickly learned is the people who are really, really good in that field often had a more technical education history than I had, in that it was comp science backgrounds or data processing, data management, data science, and that background to where they could digest larger data sets than I could, and the computer can make better estimates than a person often can. And so taught myself Python and R through that first role. But quickly realized I was never going to be the best.
You're going to get to that level, and unless you dedicate a lot of time to it.
A lot of time. And when I left financial advising, I didn't think I loved the soft skills aspect of the nature of the job. But quickly, as my entire day would be spent in Python or R, trying to manipulate data sets, I learned that I like talking to people. And hey, maybe we should try to find something that's in the middle ground.
It's so interesting. Like, we have these ideas about what we want, right? And it's like you really have to go through the experience to have the actual reality check. It's funny because when I grew up, I wanted to be a novelist. I was convinced that is what I wanted to do. I wanted to be a novelist, and it was just like, I'd sit down and when I actually said, okay, I'm going to get serious about this and start writing, I realized it's like sitting by myself hour after hour after hour after hour, like writing and thinking and writing and thinking and writing and thinking. I was like, I hate this.
It's tough. It eats at your soul.
It does. It's like, I need to talk to people. This is going to drive me crazy. There's just no way I could do this. So yeah, it's really interesting, this gap that exists between like this fantasy we have about what we like, what we really are into and stuff, and what it turns out to be once we get there.
Yeah, so I'm not sure if that's the grass is always greener syndrome,
right?
Or maybe some balance of actually what is better for the individual.
Yeah,
but
well, it's just you know, the thing is like I think it's like we actually learn to know who we are by doing stuff, right? It's not
Certainly.
like, you know, I mean, my mom's Buddhist, and so I kind of have a little bit of one foot in that background, right? But I don't believe that it's like, no, you sit there and you meditate, and that's how you get a sense of who you are. I think it's more like, no, you go out and you engage in the world, and that's how you get a sense of who you are, because you get feedback from
lived
that.
experiences trumps everything. You know? Thoughts are not physical and not tangible, so you got to get out there and you got to do it. You got to learn. And so that's actually what led me to my current role. Is I did not have any intentions of leaving. I loved my team, and as challenging as the work was sometimes, I was really happy there. Right. I think that's a great environment to be in when sometimes you're struggling, sometimes you feel great, but you're continuously learning. But this startup reached out to me, and they were looking for someone who had structured finance experience, and the asset-backed security space.
So you got approached?
Yes.
Was it a headhunter? Or
No, it was the head of HR for the company that reached out to me via LinkedIn. So always recommend having your LinkedIn updated.
Yeah, right.
And it was really tough because I had actually just gotten a promotion, I think, literally 2 weeks before they reached out to me.
Oh, wow.
And I had jockeyed for that a little bit internally and played some cards that, in hindsight, I wish I didn't play. Right. But I thought that was going to be my life, and so I was trying to position myself as best I could for the future. Right. But the more I talked to this group, the more I could see not a super high probability of it working out, but a good enough probability of it working out to where it justified the risks. I didn't have kids, no mortgage, so you know what? Why not take the chance when you're young? Yeah. And that's what's led me back down here to being in LA.
So what, if I might ask, and you have to answer, but I'm really curious, like, what was it about this opportunity that was important enough for you to switch dramatically from what you had said you were thinking you were going to do for the rest of your life? Right. There's got to be something there.
Yeah, there's definitely something there. So we are a consumer loan originator. Right. So we partner with the top private tech companies in the United States and then allow their shareholders to borrow against their shares. So if you're thinking you're a private tech employee right now and half your compensation's in equity,
stock options,
exactly,
or whatever.
You have no monetary value though of that in your pocket. Right. You can't use it to help you buy a house. Right. You can't use it for medical bills, credit card bills, to put the kids through college, whatever. So what we do is we offer you a non-recourse loan, typically at 30% max loan to value, to just get some of that cash into your pocket that you've devoted your life towards.
So when so this is specifically things that are options and not stock that you
so they have to be vested shares.
They have to be vested shares.
Yes. But yes, you're
but that's so what's different about that than just a margin loan off of shares that you own?
Right. So public securities margin lending, you can totally do that. This is for private. This is for private.
Companies. Okay, I missed that. So
if you think of like your Stripes or your Databricks or something like that, where you're not publicly traded,
I see.
Your only liquidity option if your company does this would be a tender offer.
Yeah, I know. I hadn't thought about that. Right.
And
it's a
so
private company.
what really got me thinking is in the space that I worked with, I was buying securitized credit off of like aircraft leasing or credit card receivables. And then the big focus for me was CMBS. So if you take like all of the value of office.
And again, CMBS means?
Commercial mortgage-backed securities. Right, so it's like, you're good. So like retail properties, hotels, office space, stuff like that, data centers, whatever. So if you look at all the office exposure in the U.S., right now the value is kind of cratering. So put a big asterisk on this, but let's just call it like $4-ish trillion in market cap. Yep. There is a huge percentage of debt that's taken out against that asset class. So call that like 70%.
Okay.
In this unicorn world that we're talking about for unicorn equity, there's less than 1% debt penetration against all of this value that people have built. Okay. So I'm not saying it's going to be like Office Space, where there's 70% debt against that equity. Right. But I do think that people should be able to monetize more of that value than they're currently able to. Right.
And so, and there aren't a lot of people.
There aren't a lot of great solutions out there right now. So there are a few solutions, but you'll have to give up 7 to 12% of your equity per year. Okay. And what we're trying to solve is to be the true fixed income solution, like a true just bond where it's just 7, 8, 10% interest payment that you'll make, and you won't have to give up any of your equity. So solving for that, the data is not. So
you don't need for that private company, for example, to go public and that person to get a bunch of cash before you guys get paid. They can pay it off of just their salary on a basis they're servicing their loan.
They could, or at some point they wanted, they could refinance the loan when it gets to maturity, or if they wanted to close out, they didn't have the cash, they could then sell shares, given we're only working at like a 30% LTV. Yeah, but
LTV loan to value.
Yes, thank you. Sorry.
Yeah, no, that's all right. That's all right.
So yeah, that's the name of the game, and the most fun part of this for me is just figuring out a way to do that. Right. Because if you think of like a teeter-totter, you've got your lenders on one side of the teeter-totter, your capital institutions, so your banks, your pension funds, your insurance companies, and then on the other side you've got the borrower. Right. And so my job right now is I'm spearheading this lending business, is trying to find something that works for the borrowers so the rates aren't egregious, but that satisfies the lender's risk criteria and where they think they're getting paid enough for the risk that they're taking. Yeah.
So that's kind of exciting, right? Because it's like you're creating this thing that doesn't really exist in this space. So that's cool. I mean, that's making an impact on what's going on in the world.
Yeah, my dream would to eventually be to get this asset class to where it's a product that would eventually be traded by someone like me in my last role. Yeah. So where we can see these tickers on Bloomberg, we can look them up, and there's many deals coming out a month, just structured securitized credit backed by all of this unicorn equity.
That's really cool. And you graduated how long ago?
5 years.
Yeah, that's pretty awesome.
So I don't know if we'll get there. That's definitely a little pie in the sky. Right. But that's what I'm fascinated by right now, and what I find super interesting and devoting my all to right now.
Yeah, that's cool. So I can see that. That's something big. Yeah. So that I can say, okay, I get it now. It's like you had this thing that you thought you were going to do for your rest of your life, but it's like, oh, this is really like a big thing. Yeah. That's, intriguing and interesting and satisfies all the curiosity and all that.
Yeah,
that's really cool.
Definitely not easy, but we wouldn't be here if it was.
May I ask, how many hours a week are you working?
In the office, probably 10-ish hours a day. Okay. But I responded to my first email this morning at 6:30, and I have a dinner at 7:30. Okay. And I probably won't get home till close to 10. Wow. So
first, thank you for showing up for this.
Happy to be here.
It's just like you've got a lot going on, so I really appreciate that. You're willing to take the time.
Thrilled to be here, and just hope to help people find their path. Because, like I said, this isn't where I thought I would be when I graduated school. I thought I was going to be a great financial advisor, and it's funny how there's just been little turns of the dial that change your direction. Yeah, but
but I think that's important for people to recognize, right? Yeah, it's like you don't know where you're going to end up, what you're going to do, and things change, and you change, and you grow or whatever. All kinds of stuff happens, and just understand that. Because I do, and I've said this a bunch of times. It's like I do know a lot of people when they're, I don't know if you were like this, but a lot of people when they're undergraduates, they're thinking, I've got to make this career decision, and it's going to be my whole life, and it's just not like that.
No, and what's really difficult is to help people see that, because people would tell me that in college, and I'd be like, no, you don't get it. This is my life.
Right.
And then only through looking back can you like actually see that like the problems you thought were big in the moment really weren't that big. Right. And, you know, just take it one step at a time.
Right.
And eventually you'll figure it out and it'll all make sense looking back. But in the moment, it can be chaotic, and you'll never know you're making the right decision. Like, each time I've changed gears, it's a huge, like, what if? Yeah. But, you know, that's life. It is the story of what if, and just making the best out of the situation that you can. Yeah.
So, and maybe that is it, but I do want to, like, one of the questions I have, right, it's like, if you could go back in time and offer advice to, you know, 2018 Elliot,
yeah, so
would that be it, or would it be something else? Or
I mean, I would say that to myself, but I don't think myself back then would listen. Okay. So that's a tough one.
All right.
The one tangible piece of advice that I would give is always try to have goals. Yeah. Because if you don't have like clearly defined goals for where you want to be 1, 5, or 10 years down the road, it's really hard to keep making progress on a periodic basis. Right. And then the other thing for people that I would recommend is, if you're still early in your undergraduate career, is think about the applied maths or the data science or the comp sci fields, because as our technology continues to evolve, more and more fields will rely on those industries to process larger and larger amounts of data to help organizations make decisions. Right. And I think it would have been helpful for me to spend more time in that domain. Okay. But, you know, hindsight's always 20/20. Right.
Right. And then some of that feeling is generated by that experience you had of going into this space and being like, oh, all these tech people are where it's at.
Right. So if I stayed in financial advising, that wouldn't be the advice I would give. But as I get a more holistic worldview and have now dabbled in tech and large asset management, that would have been beneficial for me if I spent more time in that.
Yeah, I mean, for the people that have, like, you know, they're comfortable with quant, they're comfortable with the math stuff, it's like it makes sense to leverage that.
Yeah, and really go deep on it. Right. And another piece of advice is, when I was in college, I had the objective of finishing with a 3.5 GPA. Right. And I graduated with a 3.498.
Oh, man.
So 0.002 off the goal. And because of that, I often would spend less time on school things than I could have, because I thought, oh, hey, I'm on my goal. Like, that's fine. But looking back, you know, school serves its purpose. It's to learn. And I think if I did commit more time to school, maybe I would have been able to explore some of those other paths, or taken my finance classes a couple of steps or layers deeper to see that, hey, the quants are the people that are really doing this well, people with quantitative backgrounds. And maybe that's something that in my couple hours of downtime I should just look into more, rather than just setting a lower bar for yourself and coasting.
So I have to ask. I'm suspicious by nature.
Yes.
So are you? You're not just saying that because you're talking to me. I'm a college professor, so it's like, you know, well, we got to make the college professors feel nice, you know, by telling them, yeah, students should study harder. Are you really? That's really, you know what I mean?
I genuinely would say that. Okay. Like, know why you're here.
Yeah.
And don't let other priorities kind of supersede that.
Right. So actually spending the time studying. And again, I do think, or spending, I think it's the issue for me, the way I'm interpreting it, right, is it's putting in the time to actually learn to do the things or learn the skills that actually are going to pay off.
Yeah.
And for you, because of the direction that you're going and because of what your interests were and because it's finance, right, I think finance is one of those disciplines where, spending that time to study really hard and really get that stuff pays off a lot, right?
Yeah, and
if you're going into, let's say you only want to do sales, right? Then I can see, you know what? Instead of focusing so hard on my GPA, maybe I get a sales job on the side and I just make call after call after call after call after call after call. So I master that particular skill.
Yeah, that's actually what I was going to say. I don't think it's as much of an emphasis on just studying, but trying to define what you think in that moment you want to do in your professional career.
Right.
And then just applying yourself many hours per week of doing that. I mean, I interned for 18 hours a week for 2.5 years through school.
Yeah.
And so I always had those reps in.
Yep.
And then I did a couple events through the CFA Society while I was in school and entered contests for that and stuff. So it's just continuously trying to apply yourself in ways that you think will benefit you for your future. And don't get me wrong, you're not going to be like, oh yes, this is going to help me because A, B, and C. No, it's never that linear and it's never that clear.
Right.
But by doing those things, you'll just pick up on certain concepts or trends that will help you in the long run.
Yeah, and I do think the habit of hard work is a good one to have.
Yeah.
Because, I mean, it depends on what your goals are, but if you want to keep advancing in the career and want to keep pushing and want to keep learning, for sure, you need to have that habit.
Yeah. I would agree with that statement for sure.
Yeah. Let's see. So, and I don't know if you've experienced enough to have some insight on this, but sometimes early careers come with learning curves, right? And so I'm curious about setbacks. Like, what do you do? Have you had any? What do you do when you face them?
Yeah.
Any advice on how to navigate that?
I've definitely had my fair share of setbacks. I think the hardest thing for me was during my first job when I started to come to the realization that this might not be the path for me.
Right.
And how to approach that with my boss, with my family, and with myself.
Yeah.
Because it was a huge transition. The past 4.5 years, I had thought I was just going to go be a financial advisor. And so I had kind of shaped everything in my life to be on that trajectory or that curve. I think there were times when I didn't carry myself in the office as best I could, because I was so conflicted within myself. Yeah. And so, like, for you guys, once you do start your career, if you do realize that, hey, what you started in isn't the path for me, know that that's actually okay. And a lot of people might tell you that, but fully embrace it. And if you do get that gut feeling, listen to it and don't fight it so much and try to stuff it down like I did. And I stayed in financial advising longer than I probably should have. Right. And that didn't hinder my development, but don't force it if it's not meant to be.
Okay. So there is this need, and I think this came up in my interview, the last interview I did, right? You really have to kind of pay attention to what's going on internally. Yeah. To really find something that you really want to do. Yeah. Be happy in what you're doing.
Yeah, you definitely got to listen to the gut and the subconscious as much as you can, because I think it is telling, and it can help you make those bigger decisions.
So let me I agree. But I do, like, a question that comes for me, and I have to say, I mean, I had a couple points in my life where I just, debated a choice for way too long. Yeah. Right? Yeah. A really, really long time. And, a career-related one. Like when I was, I was going to be a historian, and then I was like, I wasn't happy about some aspects of it, but I was good at it, and I kept getting props for doing it, and so I just kept doing it for the longest time. And one of my advisors used to call me Hamlet, because if you know the Shakespeare play, it's like Hamlet can't decide what he has these two choices, he just can't decide what to do.
That's funny.
Yeah, so he used to mock me by calling me Hamlet. So I'm in that space. But I think, but anyway, what I wanted to ask you about, though, it's like there's this thing about, listening to your gut, right? Mm-hmm. But it's also work is hard, right? Yeah. And sometimes there's just crap that you got to push through. And so how can you tell the difference? Do you have a sense for how you tell the difference between what is just, this is the crap I need to push through to get to where I want to be, and what's genuinely this really isn't working for me?
Right. So the CFA exam, Chartered Financial Analyst exam, level 1, I failed the first time. And I put a ton of hours into studying for it, and I still failed. But I guess the difference there between like giving up and continuing to push through and persevere was that I knew this was just a step along the way to get me to my end goal.
Right.
And at that point in time, I still wanted, because this was at my second job, so the bond trader, whatever we want to call it. At that time, I wanted to be the best portfolio manager that I could be. Yeah. And so I knew that, this was hard and it would take a lot of time, but I had to get through it.
Right.
Versus back when I was in financial advising, some of the harder parts were talking to clients that you weren't super keen on talking to. Yeah. And I knew like that part of my day sucked. Right. Or I shouldn't say sucked. None of it sucked. It was a great experience. But
it wasn't the highlight of the day.
I was most fascinated when the managers would come in from PIMCO or from Double Line or whatever, and when they would talk to us about their strategies. Yeah. And so I don't know how to word that more eloquently, but yes, there are definitely parts of work that will suck and are hard. Yeah. But if that's life. There's steps you got to take.
Right. I think so. There's an article that I ask my students to read in a lot of the classes that I have, and the basic point of that article is it's like the follow your passion advice is it's missing a key component, because it's like every single thing that you're going to undertake in order to be successful at is going to have a downside. It's just the nature of reality. There's going to be a hard part. There's going to be parts you're not going to like. And so you need to spend some time recognizing what are the things that are really crappy that I have a high tolerance for. Yeah. Right? Because it's like, because that's what I realize. It's like there are things that I don't like to do that are just, they just kill me. Mm-hmm. And there are things that I don't like to do that I can make it. I'm not super keen on it, but I can get through it. And I have a higher tolerance for that than other people do. Yep. And what I found is that article is right. Like that's the area where I can be successful. It's like the way that my ability to deal with that job's downside and interacts with the upside is just like, I can be successful at this. Whereas this other one, it's like that downside is just so painful for me that I just am miserable. Even if the upside on that would be twice as high as the upside on the thing that I do, I'm better off going with the one where the downside is something that is manageable.
Yeah, 100%. I think that's a great way to look at it. For me in my professional journey, something I always tell myself is a rule of thirds, and that is 1/3 of the time you should feel like you're on top of the world and you're doing better than everybody and you're just ecstatic. 1/3 of the time you should feel like, hey, things are all right. They're not great, but they're not awful. And then 1/3 of the time I should feel like I'm getting my ass kicked or my butt kicked. Sorry. Right. Yeah, that's and if I kind of balance those thirds in even proportions, I'm probably in a spot where I'm continuously growing and advancing myself. And sure, sometimes they're great, but some of the times are hard. But it's like your mom always said, balance is key.
Yeah, that's what life is. That's cool. So you work a lot. You work really hard. Yeah. Right? And so so I guess the question I have is, what are your thoughts on work-life balance? Is it possible? Are you able to achieve one?
Even though my schedule today is relatively chaotic, I do make sure that I have two things that are paramount in my life. And so one of those things is strength training, so weightlifting. Yeah. And I would recommend that everyone finds a physical hobby that they can schedule at least 3 to 5 times a week, where it doesn't matter what work you have going on, what family obligations you have going on. You're going to dedicate time to yourself to push yourself in that domain. You'll generate endorphins, you'll blow off some steam, it'll be good for you.
And your brain functions better as well.
Yeah, there's a ton of benefits.
You sleep better.
And it doesn't need to be weight training. It could be running, it could be swimming, it could be some team sport. Whatever it is, just some physical activity to block some time out for yourself where you're not working. Yeah. And with email and stuff, that's hard to do because I will get Slack messages or emails in the middle of my training session. Got to take a call. But whatever. And the other thing is with snowboarding, which I thoroughly enjoy. I make sure in the winter that I have at least one weekend each month that I can commit to going to Mammoth or going to Utah or Jackson Hole or somewhere to ski. And I'll be available for work calls if something comes up over the weekend. But it's something that I have to look forward to through the winter months when it's colder, it's a little bit darker and more depressing. Yeah. But I have this activity that I really, really love, and I've always got a trip plan that I can look forward to.
Right. Yeah, so that's interesting, right? Because it's like it doesn't have to be. I mean, it sounds like in a sense, it's like it doesn't have to be a huge amount of time as long as you're really, conscientious about taking care of yourself.
Right.
It's like you got to give it some attention, and you got to say, hey, I deserve this. I'm worth it.
Yep.
And then give that to yourself. Whereas I think if you're not intentional about it, you can get busy and just like forget and just totally neglect your own needs.
Yeah, for sure. And I'm very fortunate because I don't have family or significant other or anything like that right now. That's dragging me away from work. So it's easier for me to say this than a lot of other people. Sure. I'm positive about that.
Yeah.
But
I have a colleague who's got a newborn. He's got a newborn, right? And then I've had kids. So the thing with people, some of you out listening, probably have kids, and so you can relate to this. It's a little. Sometimes it's different. Like he's sick, but his kids are sick, and so it's like it's one thing when you're sick and like I'm sick and I'm miserable, but I can struggle through. But when you're sick and you have to take care of someone else who's sick. This is terrible because you're like, wait a minute, I'm sick. I shouldn't have to do anything. But it doesn't work that way.
So I know that I might be working a lot right now, but I don't expect this to be forever. Sure. And I can see that light at the end of the tunnel.
Right.
Or at least I think I can.
Yeah. I mean, there's other plus sides to it. So, but it is. But even in those situations, what I found was that it was still important to have set aside time for me. Right. Yep. It's because it's like when you're in the airplane and they tell you put on your oxygen mask before you put on the oxygen mask for anyone else, because if you are unconscious, you can't help anybody. And
it's very true.
So it's the same thing. If you're unhealthy, if you're miserable, it's really hard to be if you're miserable, it's hard to be generous towards other people. It's hard to take care of other people, and it's hard to be successful. So giving that time to yourself, I think is super important.
Yeah. And that's my strength training for me. It's my little step away in sanity to kind of ground myself.
Excellent. That's really great. And then I guess what's next for you? What do you?
So
what do you got sort of middle term? I'm guessing with the startup, that's it for a while. But maybe even longer term.
So it's really tough for me to answer that question well because as in the stories I've shared with you, you've seen how at different parts of my life I would always give a different answer. Yeah, right. So for right now, I have 3 goals. When I always have 3 goals. One is super ambitious, one is fairly ambitious, and then one is just is attainable, is what I'll call it. Right. So the super ambitious is within the next 2 years to have a QSIPed bond that's out there on the Bloomberg terminal that's trading, and that would be super cool to me to see that there. Yeah. The less ambitious but still fairly ambitious goal would be to originate over $500 million of loans in this space. That would be either a 144A or just private securities for some institution to hold. And I think that's a little more doable, but it's not publicly traded, so it's a little bit easier. Right. Yeah. And then my achievable goal right now is that even if this doesn't work, I want to know that I left every stone unturned.
Oh, you didn't leave any stones.
Thank you. I said that backwards. I didn't leave any stones
unturned. I'm really good at leaving stones unturned. I can accomplish that one. That one's definitely doable.
And this whole process. So for me, if for whatever reason, if the stars turned and fate had other plans for me, if I could know that I just went in every day and did everything that I could to make this product work, that would be enough for me to not look at this experience with regret or a sense of failure. When some people might look at that as a failure because if we didn't produce those goals. Right. But to me, no, we knew that it's a startup. It's newer. It's an asset class that hasn't been developed or defined. Well, so there's always that chance.
And then the other thing though is that one, by approaching it that way, you dramatically increase the odds that you are successful. Yeah, right? That's the first thing. Then the second thing is, if it turns out that it isn't successful in terms of any metrics that you have now, just how much are you going to learn by going through it that way, and then what you get to do with everything you've learned by doing all of that. Right?
Learned a ton along the way. Had a lot of super interesting conversations with very influential people in the space. And that's something I don't take for granted. Yeah. So we'll see what's next, and who knows where it'll be, but I'm sure it'll be exciting.
I'm pretty confident. It sounds really interesting. I'm really excited for you, and think that's just cool. So this has been great. Yeah. I really appreciate your taking the time out from your huge business schedule. By the way, for any of you who are out there thinking that you don't have time to show up for my podcast, if Elliot can do it, you guys can do it. So
and building on that, if anyone ever has any questions, feel welcome to send me a LinkedIn message, or Professor Klein has my email. He can give it to you.
Yeah, for sure.
And might not have the best answers out there, but happy to try and help others find their way.
Yeah, that's really great. And I just want to say, I also, aside from the time that you've taken, I really appreciate just how thoughtful and insightful your comments and thoughts have been.
Yeah, let's hope the listeners think it's also as insightful.
I'm sure there will be ones who are like, wow, that's fantastic.
Happy to help and happy to be here.
Thank you very much. I really appreciate it.
Thank you.
Thank you all for joining us today at Beyond the Beach. I hope you enjoyed the conversation as much as I did. And if you're enjoying the show, please consider subscribing on Spotify, Apple, YouTube, or wherever you get your podcasts. And for those of you who want to go the extra mile, please consider leaving a review or comment. I'd love to know what you think. Thank you.